Because I want to know what do you have that I can fall back on, that maybe I can get my hands on if you walk away with my money. I want to see whether you are an ambitious person that has built up some assets or some value, or do you have nothing and I need to invest? You understand what I'm saying? You probably have something that you can say, but it's mine, that I can actually show that I'm worth something. I'm not necessarily your clothes and your shoes, but you know what I'm sort of saying. Maybe you've got some equipment or some controllers or something that you gathered along the way and so on, that your parents or whatever bought. Cool, does that make sense? Right, so now we're quickly just going to go back to the income statement and the balance sheet. So it's a core financial statement, report the cash generation abilities. It's a scorecard, all right, to check your financial performances. And it's done once a year, either end of December or end of February. Right, so there's three sections of an income statement. Right, I'm just going to do this.
So this is the balance.
This is the balance sheet. The assets, liabilities, and the equity comes there at the right under liabilities.
And that's all at the balance sheet.
That's what the balance sheet is. But I mean, a company can have this long or big balance sheet with all the assets and all the liabilities, and you get creditors that you owe and debitors. I mean, that owes you money that comes here under asset. You just don't have it in cash. It's with them still. All right. So there's three sections in an income statement. The top section is the income, right? The income section. Everything that you have made for that financial year, all the money that came into the business, right? Minus the cost of sale. Now, like I said last week, was it last week? Yeah. Cost of sale is everything that goes into the product to be able to sell the product, whether it is the physical product with alterations and everything, and your add-ons, all right, that makes up the total price for it, is the cost of sale. And there you get a brutto profit or a brutto loss. I don't know whether you're going to make a loss or a profit, but hopefully a profit. That's the top section. Right. Oh. So the income generated by the business, and then the cost of goods or cost related to sale. Then you get a growth profit margin. All right. That's the top section. Then just underneath that, you get under income. You can have earnings before interest. Anything else like bonuses or I don't know what. And then you get your operational expenses, like your overheads and labor, and you get your total expenses, like the whole list of all the expenses, right? And you get the total there. Then you get your net profit minus, okay, so the net profit is the gross profit minus the expenses, so the top part minus the expenses. Then there's another part that I'm not necessarily going to go in. What do you know about depreciation?
The value goes down.
The value goes down.
Like a car or...
Yeah, like a car or equipment and everything, whatever. The value, so you need to write it off over time. Right? Normally you write it off to R1, so it just stays on the books. Even though you can sell it like this thing, we have written it off already, this particular one. We've got this one for, I think, 4 years or something. And computers you normally write off over 3 years. So on our book values it's R1. But I can sell it for probably 8 grand or something. You know? But that is what depreciation. So why do you do that? Why do you bring depreciation in your business?
It's just so that it's just to make it accurate at the end of the day.
To make the value of your company or whatever accurate, right? So and also as for tax purposes, because you're going to show a lesser profit. You can write it off against your income that you got as an expense underneath. I'll show you now an example that lowers your profit, so you don't have to pay those taxes. Yes. So depreciation is an expense, basically.
Now you're saying that on your book value is essentially R1.
Yeah.
So how does that work with insurance? Should that be stolen? Do they pay you what it's worth on your books? Or
You negotiate with your.
That's your own.
Yeah.
Okay. Cool.
But you can say what the value is or what it is worth, market value.